So today we'll talk about how to become consistently profitable in trading, the steps you gotta take, and what to avoid, and how to get there in the fastest means possible. What's up, traders? Welcome back to Bangkok. Once again here in Thailand. Been here for a while, but it's good to be here anyway with the nice weather outside today. So what I want to share with you now is really the 5 key points, the 5 parts to being able to become a consistently profitable trader. And this is gonna work if you have results now that are profitable sometimes, but usually not profitable over the long term, or you have these ups and downs all the time where you have good months, bad months, or you just cannot find a way to get to overcome this issue of not being profitable yet. So let's dive right into these 5 points that you gotta apply, and I'll give you some tips and examples for each of them. The first thing you need to be able to become a consistently profitable trader and get consistent results in trading is a clear, defined strategy with rules. Now, for this, I have an acronym that I use all the time called STRONG. And if your strategy is strong, meaning it's fitting all the criteria of strong, which I'll share in a minute, your strategy is going to be likely to work over time. Now, if it doesn't fit these criteria, then it's likely that it's going to break down or not work out over the long term consistently. So you really got to kind of go through all these things and make sure you have all these things in your strategy right now. So S in the word strong stands for specific, meaning your strategy needs to have specific rules that you can follow all the time and that are clear and you have no doubts about them. T, the second one, stands for tested. Now, tested, we'll talk about it in a few minutes, but you need to test your strategy and have some results and data on it. If you don't, then you're pretty much gambling and you're not going to be able to get to any kind of results in trading. Third one is R for replicable, which means that you're able to replicate or trade again your strategy in the live market. So, for example, some people, they test the strategies in backtesting and it works really well and the results are amazing. But when they get to trading it live in the live market, it's harder to trade. Either they have some doubts or they had too much discretion in their kind of strategy before when they tested it in backtesting, so now it's different, and now they cannot figure out when to draw X thing on a chart or when to do X factor in the chart, and it's kind of messing up at this point. So you need to be able to go from testing, you have this idea first, or you test it out, you have some good stats, to be able to execute your strategy live in the market after. And that's really, really important. O now stands for organized. And organized simply means that you have some framework or either like a plan that you print out on your desk or some kind of step-by-step process you have in front of you when you trade that you can just follow and complete and go through. If you don't have a process or some kind of plan that you can follow all the time, first of all, you're likely to make mistakes when you begin. Over time, it gets easier. Like you can just like trade without a plan, get to know your rules in your head, and that's fine. But in the beginning, you need to have this kind of plan to go through to know what to do and to not miss out on any kind of rule, anything you forgot about, or taking trades based on emotions and not real rules that you have to follow in your plan. That's really important to follow these rules all the time and to organize it into a framework that you can just follow and have in your desk all the time. If you want to check it out, I have links below or probably here in the corner somewhere, a trading plan template you can just use and download and basically copy, and you'll be able to print it out, put it on your desk, and have your rules written down on paper. That's really useful for people who want to have a plan that they can follow and use all the time. And that's not too complex either. Sometimes you have trading plans with like 100 pages or even like 30, 40 pages. It's maybe good information for sure, but hard to follow. This plan, which I'll link below of course, is a plan that you can just use, and it's one page and like 2 pages. So you have the front and the back, and that's it. So you're able to look at this easily and follow your rules easily in the market. That's free to download. Check out the link below for that, of course. Now we are at the fifth letter. N in the word strong stands for non-complicated. And you'll see people who have strategies with like 5 indicators with 10 different factors to look at or many things that they want to have in the market. It tends to work well for some time, but over the long term, it tends to not perform so well. Why? Well, because it's kind of curve fitted to the market at this point and it won't work out for the long term. The key here, and this goes with the 6th letter, so G stands for grounded. And grounded means that you have to follow some kind of rules in the market. You have to be able to trade in accordance to how the market behaves and in accordance to the market phases, which I've done videos on in the past. And you see that many of the best traders out there use something that's in line with the market. They don't just trade indicators for fun, but they follow something that makes sense with the market. When it's trending, they trade the trends in a certain way. When it's sideways, they trade in a different manner. And that's what your strategy should look like in the market. Now, if you would like to have a chance to learn from the best traders out there, there's a pretty cool event coming up. It's called the TraderFest 2021. It's organized by Boris Salzberg, which I had before last week on the podcast. Boris is a really good trader, and he was able to put together a network of traders who are going to come to talk and share the strategies and what they do in the market on a daily basis. Now, this event is pretty cool because they have pretty much 12 international traders in all countries around the world. They're going to have Linda Rashke, which I had on the podcast before. Linda is a really good trader with over 40 years of experience. She will share what she's doing in the market with her strategy and her core setup. And this, by the way, free event, totally free, no paid thing, no charge or anything of the sort, is going to be 11 hours in total from all these speakers added together. And I'll leave below the link for you to sign up. Thank you to 8cap, the broker sponsoring this event, for organizing this, and I think it's going to be really good. Now, the link will be below to sign up. If you cannot attend these conferences, which are going to be next week on the 26th and 27th of June, you can always sign up and you'll get the replay automatically. So you'll be able to watch all these speakers again, hear all the advice at your own time, anytime, of course, after the event. So I hope you sign up, hope you make the best use of this, and let's get back to the video. And now we'll get back to my point number 2 in becoming a consistently profitable trader. All right, so point number 2 in becoming a consistent trader is having proper strategy statistics, in the sense that your results or your statistics, your metrics, need to make sense for you to become consistent. And a simple trick you can do here to find that out is you can go to those many websites that have these equity curve generators, and you'll get to see what your results would look like over the long term. And this kind of, first of all, gives you a better idea of what you can expect. If the strategy is profitable, it will be profitable forever. Because sometimes you might think if the strategy you have is profitable, then you're going to be profitable all the time and consistent, but it's not the case. There's a part of it that's basically dealing with probabilities, and it's not going to be all straight all the time. You're going to have some ups and downs. And these kinds of websites are going to help you figure out what your equity curve will look like in the market. So here's what I mean when I talk about the equity curve simulator, and something you can do easily with your statistics. Now, there are no best statistics for becoming a good trader or becoming consistent. It doesn't really matter. You can have any win rate you want, any average win you want, that's fine. What matters is really the combination of both and making sure that you have stats that give you the kind of curve you're looking for in the market. And so here's a simple website called equitycurvesimulator.com that you can go to if you want after this video. And what you'll do is you'll put in your start equity, so how much capital you want to start with. Let's just do here, to make it simple, $10,000. I think that's pretty fun. Then you enter here your win rate. They call it win probability. Let's see, win rate is, in my case, 48%. Then you enter your win-loss relation, so your average reward to risk. You put in here, let's say mine is 2, because I have a take profit at 1-to-1 and 3-to-1, so my average is 2 or so. It could be less. Let's just say, to be more realistic, we'll put like 1.90 to 1, because you have sometimes a spread to take into account. Then number of trades that you want to simulate. Let's just do here, 100 is good. You could do less, more, it's fine. And number of lines we want to have, so these are going to be the number of equity curve we want to have in the chart. 20 is good, so you have 20 different combination of equity curve. And then risk per trade, 1%. Now you see if you put this higher, you're gonna have some more deep curves, and it's gonna be a lot of more trouble. So I average myself 1% per trade, and here you do start simulation. Now what you'll see is here you have different equity curve based on your 1% risk per trade, and you'll see that you have different ways of having this. So this one, the lowest one, gets to around 9,000 or so, and gets back to somewhat above or not so, and then gets back up after in the long term. But what you'll see here is, first of all, two things. First is that you need a certain number of trade to have good results with this kind of win rate and this kind of average win. So even at, let's just say, that's 47 trades, you could still be losing money in this market with those kind of statistics. So you have to let the numbers play out over the long term. That's the first thing. Second thing is maybe you'll hit this kind of home run here for your trades. That could be possible. But in most cases, your returns are going to look like something like this here, right? So it's going to be a slow, but still steady equity curve with some kind of drawdown over time. So it gives you a better idea of what you can expect and what you can see. And then you have your stats here based on the statistics, the probabilities here. So even if your backtest says your drawdown is going to be X much or that amount of percent, it could be more because of this over here. So the biggest drawdown here is 9.8%. That's in line with what I usually have myself. Average drawdown is going to be 6.8%. Minimum equity you got to is 9,000 100 or so. This is in euro, should be in dollar. It's fine, it's the same anyway. Cool. And yeah, so average performance 45%. I think that's going to be per total number of trades, so per 100 trades, 45% return. Return on maximum drawdown 3.6, and maximum consecutive of wins 9 and losers 9 as well. That's interesting to see. So here you get some more better ideas of your trades over the long term. And what if we put like here 200 trades, right? We start simulation. You'll see it's just going to be more crazy here. You have more different characteristics, more different curves. Now this one seems bad, right? But it's not that bad because you're still above your 10,000 here, your initial capital, just not going that far in this. But you'll see that your drawdown here gets bigger, but your average performance also gets bigger, of course, in that case. We have the same return on max drawdown. So you can play around with this, see what that looks like with your trade, with your statistics, and with your results. And let's get back now to point number 3 in this video. Now let's get beyond that. We've talked about, first of all, your strategy that you're going to have in the market. We've talked about having the good metrics for your strategy in the market. Next step is you and your execution of the strategy. And what you want to do here is to be able to become consistent and have even smoother results. You need to be able to find out your mistakes in the market. Now this should be done in a periodic review process where every couple of weeks or months you go back, see all your trades and find out which trades followed your plan, which trade didn't. And it didn't could be like a small thing that you didn't follow or respect in your plan. It could be like a small detail. And we want to find those things out as soon as possible, because if you have these mistakes that you repeat over and over again, they might be fine for now, you might have some profitable trades for now, but over time, over the long term, these trades will be losers, and these trades will not be helping you perform better in the market, and they will prevent you from being consistent in the market. And that's why fixing those now in the beginning really help. Now for most traders, they will have like a few mistakes they make, not like a ton of them, but always the same one that they repeat. 2, 3, 4 mistakes that they repeat in the market. It could be that you let your trades run too far. It could be that you move your stop loss to a lower point when price goes against you. It could be that you second guess yourself on some trades. It could be that you adjusted your take profit when you were scared that the price will go against you. And all these things, you gotta be able to track them. And you gotta be able to see what those mistakes are and then work on correcting them. If you have to work with a psychologist to work on that. And you can also attend the TraderFest link below to get some more insights and also boost your mindset by being around other traders for a couple of days. That's gonna be really cool to do that. Some of them might share their mistakes and what they do wrong, and you can also learn from them to be able to do that right the next time. Now this is the part where you have to find out your mistakes, but the next part for me was really powerful, and that's part 4 in this whole process, is being able to check for when you miss trades. And what that means is when you miss a trade in the market, it's going to be a next trade after, of course, but what if you do this for a long time and you miss all the best trades in the market because you are scared after losing trades? Well, of course, you can see that your results won't be as good because you're not there to take the right trades when they come. In other words, you don't let the numbers play out by taking all the trades, adding all the numbers, and then you'll get good metrics out of it. But a lot of people, they have a couple of bad trades, and that's where they stop. They go out, they don't take trades for a week, and they miss all the trades that would be the right trades to take. But because they were afraid of taking those, they missed them. This happened to me many times before, and I had to really work hard on finding out which trades I missed, why I missed them, and make a plan of action to not miss them in the future, because those were really hurting my results quite badly. So the 2 things here in your execution that will prevent you from becoming consistent or making mistakes, we talked about that before, and missing trades in the market. Or also could be avoiding trades in the market, of course. That goes with missing them, same principle. Now you want to find out when you miss them, what happens when you miss them, and how you can fix this for next time and miss less trades. Even if they were losing trades, that's all fine. We just want to make sure we avoid missing trades that could be good trades in the future. And sometimes one good trade that you miss could recover from 2 or 3 losses that you've had before. And that's why it's so important to check for your trades that you miss. And if you miss them because it's night time and you're not trading at that time, that's all good. That's fine to me. I don't really care about those trades. But we care about trades that you could have taken, but you didn't take for whatever reason in the market. Now the 5th step here in becoming consistently profitable in trading, it's going to kind of like tie all of this up together. And that is that every 30 days, you should do a review. Have this review that's going to be non-negotiable. And this will really help you to put everything we talked about together. So every 30 days at the end of the month, or you do this whenever you want. It could be also every week if you want, if you are a day trader or scalper. If you are a day trader or a scalper, do it every week. If you are a swing trader, like more long term, do it every month, every 30 days. Now what you do in this review is you look at all your trades for the past month, and you figure out what was going on with these trades. You look at your metrics, your win rate, your average win, all these kinds of things. And then you look at, was there any mistakes in your trades? We'll talk about this in point number 3, finding out your mistakes. Were there any trades I took that were wrong? Were there any trades that I took that I didn't really follow my plan completely? I made some mistakes. All these ones, I want to note them down. Find out what the profit would have been if you took those trades properly and they didn't mess up with your rules. And compare it to your results now, your P&L now, your win rate now. And find out what would be the difference between those two. Now, most often, from experience, you see that if you took your trades all according to plan, for most months, your results or your P&L will be better. Now, that's surprising because you might think that you play with your trades to get better results, but you're actually going against your plan and against what's best for your profit. Now, for most months, some months you have some results where, you make some mistakes or some changes and you get better results. But most months, it won't be that case. That's why we have a plan as traders. That's why we follow our plan all the time. You look at your rules and what do you have to change anything in the strategy to make it different. You might do some backtesting there in your review. You might do some things to look at what other options you have for your trades and how you can be better next time. Now, traders who do this review always have some kind of thing to work on. They can always find out the goal or something to improve, and then the next month they work on it. So they have this circle of continuous improvement all the time. They find something wrong with the trading the first month, they correct it the next month. They find something wrong again, they correct it the next month. And so how can you not improve with that? I don't know. You always improve with doing that all the time. You always become better. And that's the goal of as traders. We should always work on becoming better. Compare this to someone who doesn't do that, doesn't do any kind of review every month. They like making mistakes over and over again, and they never work on becoming better much. They might think they work on becoming better. They might do something. They might do a lot of testing. They might take a lot of trades, but they're not really working hard on fixing their mistakes. And that's where becoming consistently profitable is all at. It's about fixing your mistakes and becoming better over and over again, months after month. Now, I hope that makes sense. I hope you got some value in this video. Hope you liked it. Definitely check out below the TraderFest happening this weekend, 26th, 27th of June. Like I said, you'll be learning from 12 really good traders who are some of the most prominent in the trading field. Linda Rashki will be there. A lot of our traders that I know and I've interviewed before will be there. And the link will be below to sign up for free to that event. Subscribe to the channel if it's not done yet. And I'll catch you back here in the next video pretty soon. Ciao.